For years, VeChain has lived in this strange place in crypto. It's not a meme coin. It's not a hype-driven token. It's not making headlines every week. And because of that, many investors assume its ceiling is low. But when you dig deeper into what VeChain has built and what's quietly happening behind the scenes, that question becomes a lot more interesting. Right now, VeChain is nowhere near $10 billion. The price is still sitting at just a few cents, far below the glory days of 2021 when VT hit its all-time high around 21 cents. Most retail investors checked out years ago. People moved on to faster, louder projects. But the thing about VeChain is that it does its best work when nobody is paying attention. While the spotlight shifted elsewhere, VeChain wasn't sleeping. It was building. It was upgrading. It was laying the groundwork for something much bigger than a quick relief rally. And that's where this story really begins. Because a $10 billion market cap sounds ridiculous, right up until the moment you start connecting the dots. The first major shift happened quietly on July 1st with the launch of VeChain's Stargate staking program. It didn't explode on social media. It didn't send the price flying. But it fundamentally changed the economics of VT. For the first time in its history, VeChain gave holders a powerful reason to lock their tokens away. The more VT gets staked, the less VT is floating around in the market, and that reduction in liquid supply is exactly how long-term price floors get established. When you lay it out like that, a $10 billion market cap stops sounding impossible and starts sounding like a matter of timing. If VeChain returns to its 2021 all-time high, it's already halfway there. If enterprises double down and staking participation keeps climbing, the fundamentals push harder. And if the next bull cycle kicks in with real momentum, VeChain could easily shock people who wrote it off too early. This isn't a prediction. It's a possibility, a real one. And the crazy part is, most investors won't even notice the shift until it's too late. So, is VeChain's road to a $10 billion market cap possible? Absolutely. But the people who understand why, the ones who understand the utility, the tokenomics, the enterprise integrations, and the quiet grinding progress, those are the investors who will be positioned long before the rest of the market wakes up. VeChain has spent years building in silence. When the noise finally returns, it might just be one of the loudest surprises in the entire crypto space. VeChain isn't just another token. It's a full-fledged platform designed for real-world applications, especially in supply chain management. Recently, BSC News dropped an ultimate guide on VeChain, $VET, and it's packed with insights. Let's break it down in simple terms so even if you're new to crypto, you can grasp why this project is a big deal. VeChain kicked off in 2015, founded by Sunny Liu, who used to be the CIO at Louis Vuitton China. His background in luxury goods gave him a front-row seat to supply chain headaches, like counterfeiting and lack of transparency. So, he built VeChain to fix that using blockchain. Fast forward to 2025, and VeChain has grown into a powerhouse for enterprise blockchain, focusing on real-world assets rather than just hype-driven trading. At its core, VeChainThor, the platform's blockchain, combines blockchain with Internet of Things, IoT tech. Imagine slapping a smart chip or QR code on a product. This creates a digital passport that tracks everything from manufacturing to your hands, all immutable and tamper-proof. It's compliant with big regulations like those from the European Securities and Markets Authority, ESMA, making it enterprise-ready without sacrificing privacy. Now let's talk tokens. VeChain has two, VT and VTHO. VET is the main utility token used for transferring value and staking. There's a fixed supply of about 86.7 billion VT, which means no endless minting like some other cryptos. It's super precise with 18 decimal places, perfect for everything from tiny IoT payments to big business deals. VTHO is the gas that powers transactions. Holding VT automatically generates VTHO at a rate of 0.000432 per VT daily. No staking hassle required. For instance, if you hold 10,000 VT, you get 4.32 VTHO every day. Transactions burn 70% of the VTHO fees, which helps keep the system deflationary and rewards network maintainers with the rest. This setup keeps costs predictable, even when the market gets wild, which is a huge plus for businesses. One of the exciting parts of the guide is the 2025 upgrades. The Galactica protocol, launched on July 1, 2025, brings Ethereum compatibility through Shanghai EVM integration, making it easier for devs to build on VeChain. It also burns 100% of base fees for VeChain, ramps up scalability to potentially 10,000 transactions per second, TPS, and introduces type transactions for smoother operations. Then there's Stargate, a new staking platform that went live the same day. It offers $15 million in VeChain rewards over 6 months and uses NFTs for staking positions. Staking limits jumped from 25 million to 600 million VET, with tiers like Dawn Node, starting at 10,000 VET, up to Mjolnir Node, 15 million VET, giving multipliers from 1x to 5x. This makes staking more accessible and boosts network security.